Hello, my name is Jame DiBiasio. I'm your host at DigFin VOX, Voices in Digital Finance. If you enjoy the program, give us a like, give us a subscribe. My guest today is Hubert Knapp, co-founder of Chavanette Advisors, a small advisory business that is consulting central banks on central bank digital currencies. Hubert has an incredible amount of experience from commercial banking to central banking. We spoke about his work helping institutions with digital transformation and the big question marks when it comes to CBDCs. Hubert Knapp, welcome to DigFin VOX.
Thank you very much, Jame. Thank you very much for the opportunity.
So this is going to be, I think, a very interesting discussion. We're going to start a little bit light, and then we're going to get into some of the details. You are one of the partners at Chavanette Advisors, which is working with central banks or helping them or trying to insert yourselves into the conversation around central bank digital currencies, which is a huge topic. Before we get into all of the weeds with CBDCs, however, I would love to hear a little bit more about your personal experience, your background. I understand that you began your career as a banker in Germany, but then most of your career you've been on the ground in places like Jakarta, Hanoi, Bangkok, working very closely with a variety of financial institutions in Southeast Asia on issues around digital transformation. So I would like to maybe start with that so we can kind of set the scene from the commercial banking side rather than the central banking side of where we're at with those digital projects, the state of commercial banking in Southeast Asia. How ready are these banks for the future? And then we'll get into the central bank side of things.
Okay, thank you very much. Well, like you said, I started as a banker in Germany and then went to London. And from London, I went to Asia. So I was the deputy general manager in a merchant bank, which was owned by Kleinwort Benson, UBS, Dresdner Bank, Daiichi Kanyo Bank, and one of the local banks, Bank Bumidaya, which is now part of Mandiri. Okay. And after my contract expired, I joined Booz Allen and Hamilton, which just started an operation there. So at that time, consulting in Asia was very new. People like McKinsey, they made statements to the banks at that time that they will not go to developing countries. And Booz Allen was different. They said, this is a challenge, why not? Let's go and do it. So we then started what I would say the first large-scale transformation project in the region with BNI 46 at that time, which I must proudly say is one of the banks which survived the financial crisis and is still thriving very much. So they were not amalgamated into Mandiri like the others. And another interesting thing with BNI is BNI was the first central bank of Indonesia, the first indigenous central bank. And Bank Indonesia was a department of BNI, which then later on became the central bank. Anyway, so yeah, many people do not know that. And in BNI, we did a 5 years transformation project, which moved the bank basically from a manual environment to one of the first online systems in Asia. So in those days, we wouldn't call it digitalization or transformation. We would call it re-engineering. That was the word at that time. And from BNI, we then used that knowledge to do other projects in Thailand, in Singapore, in the Philippines, in Nepal, in China, everywhere in Asia, and really utilized all that experience which we gained in Indonesia.
So with
So
that history that you've got, Hubert, I'd be interested in one respect. You mentioned that, we didn't call it digitalization. We had other names for these sorts of transformation projects. So on the one hand, banks are always going through some sort of change process, right? And trying to, often around business analytics or data and being better at that.
yeah,
So how new is what's happened in the, let's say, the past 5 or 6 years, when we talk about the digital side? Is this really old wine in a new bottle, or is there something fundamentally different about what's happening in banking now?
it's definitely not old wine in new bottle, because the technology has very much advanced to those days. And now we moved away from mainframe to cloud computing, which is a totally different approach. Even so, you could make a point that a cloud environment is also very similar to a mainframe environment. But the data centers itself are totally different. You do not have one large machine which handles everything. You have many, many servers, hundreds and thousands of servers which take over. And if one of those servers falls over, then another one automatically takes over. So it's a totally different environment. In addition, things like blockchain, things like distributed ledger technology, um, the utilization of graphical user interface that was not existing in those days. In those days, we had green screens and everything was driven by transaction codes. I give you an example. For a teller in those days, it took 3 months to train them, and they had to memorize more than 500 codes to operate the teller system, the teller operation. And that, of course, was totally changed when we had the graphical user interface. And from 3 months, it went down to 1 day.
Right. So the labor needs and the skill sets also changed, because instead of having to intensively train somebody to understand 500 components to a machine, now it's much more, it takes them just a few days to get up and running, and now they can serve all kinds of needs.
That is correct. But what is now important nowadays is the architecture. You need to have an architectural approach and define very clearly how those different components work
Right.
together. And
So
most of all, what was a problem in those times was the integration.
right.
Today we have APIs, which we didn't have at that time.
So
At that time, something which
the old challenge was you could just bolt things on top, and then you might have some middleware to sort it out for you. But you were basically not really thinking about the core systems. You didn't care. You were just finding stuff that the front office usually wanted, and you would just buy it and bolt it on, or you'd build it yourself and bolt it on. But now, on the one hand, with APIs, it's easier to bolt things together, I guess. But in terms of that architecture, it doesn't work anymore, because what are you sticking that API onto? The data is still stuck in some siloed, warehoused place. You can't get it as effectively. So, what is let me know if I got that right. But also, do you have a sense that banks are not very good at this architecture question, that they are successfully repositioning their core systems, or is this still a question mark?
banks, their core banking systems today, a lot of them, I would say still 90% or 95% were built in the 80s and the 90s. So they are very old. They are very efficient. If you look at some of the core banking systems in China, which handle millions of transactions a day, they are still using assembler in certain areas. So the core banking replacement over the next 10, 15, 20 years will be massive. I think it's probably a $1 trillion business, because all the banks need to replace their core banking systems. They were not built for digitalization. They were not built for mobile apps. So like you said, at the moment, a lot of things, they're getting bolted on. But it's like a house of cards, right? If you build a high riser, but your foundation is only there for, let's say, 5 stories, and now suddenly you build 30 stories, the chances that this will collapse at one stage is very, very high.
Have
And
we seen, yeah, have we seen a collapse like that due to shaky or outdated architecture, or are banks still able to keep all the wheels spinning in the right direction?
it has happened, and it will happen more. In addition, there are vulnerabilities in terms of cybersecurity,
Right.
right? Because those systems, they were a walled garden, right? They were not open, right? So a lot of the defenses are still a little bit shaky, which were built. So there's no doubt in my mind that the core banking replacement will be a huge market. And to do that, to replace your core banking system and to build all the different uh, features in, functions in which you need, requires a microservices architecture. And if you don't have a good architecture, your whole house of cards will start shaking, right? You
What
need
is the
a
skill set? Yeah, we hear a lot about bank culture, mentality, agile, being agile, DevSec mentality. Um, is this a question of culture? Is this sort of a top-down change where everybody has to become much more digital or customer focused, or is it really just no? It's not about culture. It's just about making the necessary investments into very difficult kind of infrastructure needs.
Well, you brought a good point. You talked about customer service, right? In the 1980s, we were talking about customer service. Today, we are talking about customer service. So yes, that is the new wine in the old bottle. But what the hell is happening in banking? Why are we still talking about customer service? Why is that not something which is already a given and all the systems are geared toward that? So that is definitely an area which needs a lot of improvement.
Okay.
And because now we move the functionality, the features of a teller or customer service officers to the customer itself, now it is important that your mobile apps are very customer friendly and are easy to use. And again, that requires very good UI, UX designers, and then the integration in the backend system.
I think a lot of banks and other organizations think about the phone, they think about the customer experience, they think about what it looks and feels like, but I don't know how good are they at tying that end-to-end side of having the back end that's there to support an end-to-end digital service.
Yeah, a lot of them, they are still struggling with the integration of the front end with the back end. So if you see a bank which sends you a message on your mobile app and says, oh, this weekend we have to shut down for a couple of hours to upgrade our systems, you know that they have not properly designed uh, architecture, infrastructure, and that it is just a matter of time till everything will just fall apart.
Right. Okay.
And
All right.
my concern is that some of the largest banks in ASEAN are still built on a very shaky foundation.
How are they able then to participate in next gen types of services or architecture, for example, distributed ledgers? We're hearing more about tokenized deposits, which would be a very radical rethinking of the core product for a bank, or cross-border payments using tokens rather than account-based services. Um, and then, of course, many governments are looking at CBDC. So commercial banks will have to be able to manage this world if that's the way it's going to go. So how are they doing it today if they don't have all of their their systems and IT in good shape? And will this, if governments want to go in a certain direction, is that going to really force a lot of faster changes within the commercial banks?
Well, how do they do it today? They do it with chewy gum and scotch tape, right?
Okay.
That is how that is being fixed. But this is where CBDC comes in, and I would now say a larger CBDC, really using it as the new financial services infrastructure, and really thinking about how banks should operate, payment providers should operate in the future, and integrate with the central bank itself. So it requires an even more drastic thinking than what we hear at the moment about CBDC, which often focuses on cross-border transactions for large transfers and cash replacement. But this is the opportunity to really fix and change the entire infrastructure, banking infrastructure and ecosystem for the digital economy.
So why don't we
Right?
just talk about the vision thing for a little bit here? Why don't we think about what is this world going to look like if things go well in a couple of markets? Why is this important? If you're working at a bank, why should you say this is going to be a big deal for my career, for my institution, for my customers? And these are the things I'm going to be able to do now that I can't do today.
Well, I think a lot of the mundane tasks that could be taken over by computers and by artificial intelligence, which then gives a chance to really focus on the customer and provide bespoke services to the customer itself. So that is one of the major chances. The other thing is an improvement of the operation and security. I give you an example. At the moment, banks have to spend thousands of man hours every month on what they call the reporting regime. That means reporting to the central bank or the banking supervision. All of that could be totally automated, and you could directly link those reporting systems into the central banks, into the regulator, right? That technology is already there, and it could be done today, but for some reason it doesn't happen. There is at the moment only one bank in the world, or sorry, not bank, country in the world where this has been done, and that is in Africa. I don't know exactly the country anymore, but that is the only one. So why is that, right? There is also sometimes reluctance of the banks to open their books for direct scrutiny. Mm-hmm. But if you see what Mrs. Yellen in the US is saying, that she believes that now hundreds of banks will get problems and will have to close. You will see that it requires more information and more monitoring of what is really going on, especially in a fractional banking system. Because if that collapses, if there's no direct reaction then from the central bank, or if they react too late, it can have disastrous consequences for a country. And because all the countries are so interconnected, it can have disastrous consequences for the entire world.
So we're talking about the Silicon Valley Bank collapse of last spring.
For example, yes.
For example, yes. And the speed at which that happened. Obviously, there are some particular circumstances around that bank and the nature of its client base, and its deposit base. But also, the Fed itself was very creaky, right? I mean, they were unable to provide help past some 4 p.m. deadline, which was probably set by some bureaucrat in 1954 or something. So
Yes,
what's the uh, but what you're saying, Hubert, is that events like these are waking up regulators to the need for themselves to have a much deeper look into the individual banks that they oversee. The banks are reluctant to open their books even to their supervisors to that extent. But you're saying that, so this is one reason why this wholesale remodeling of the IT architecture has not happened, in addition, I guess, to just cost and budget. But
yes.
uh,
You have algorithmic trading,
yeah,
but you can't get information from the banks in time.
right, right. We can trade in nanoseconds,
Yes,
but it still takes 2 days to clear and settle.
yes, yes. Or for a central bank, it can take days till they get the reports from the bank, if
Right.
not weeks.
Okay.
Right?
So we're talking about a truly comprehensive change. And I guess how much of this, you made the point that it hasn't happened, even though you've been talking about this since really for 30 years. Um, and is this something that can happen quickly, or is it, and can it be done piecemeal, a few institutions at a time who decide to invest in this, or is it something that is going to be a lengthy process? It will require kind of market-wide adoption, just like a public blockchain requires a network effect to be of any use.
It will require a network effect for the entire country. So the central bank has to build the infrastructure, the ecosystem, and then the banks have then to individually fit into that ecosystem and then come up with their own products and services which fit into that.
And the CBDC, is you're arguing, is basically the main. It's the thin edge of the wedge. It's the tool that will force everybody to sort of upgrade their systems if they want to participate in central bank digital money.
That is correct. That is correct. So central bank digital currency, CBDC, is one of the drivers of the chain. And depending how aggressive you want to be, you could even reverse the current banking system.
Yeah.
So
One reason I hear that CBDCs have been slow to take off is concerns that they would be disrupting the commercial banking system. If there was some sort of run or loss of confidence, then people would naturally gravitate towards the money that's issued by the central bank because it's a taxpayer funded thing. It can't go bust like a commercial bank can. And particularly in more fragile markets, I think. But we saw with SVB that it could even happen in an advanced financial system. Um, what's your take on that? Is this a question of the central banks being overly cautious or rightfully cautious around the commercial banking network, which they want to preserve, obviously? Is it just vested interests, or is there something genuine that we have to be concerned about in terms of not overly disrupting the system, even as we try to overhaul it?
well, I think ultimately it's all politics. It is all about control and who is in charge. Because even the Silicon Valley disaster, first, their management didn't know what they were doing, because the golden banking rule is that you don't finance long-term investment short-term, right? That is the first thing I learned in banking. But then if the central bank, if the Fed has all the information, they could have easily stopped the run on the bank by making enough liquidity available, which I think at the end they also did. But it led to a power shift and all of that.
Yeah.
I think the operation in the UK was, if I'm not correct, was sold for £1 to HSBC,
Yeah.
which I view is ridiculous, because I think their portfolio was sound, and even in the US it was sound. They just had liquidity problems.
Yeah,
Uh,
I mean, yeah, a great coup for HSBC. Obviously, now we have to find out if they know what to do with these kinds of customers.
yes,
Because
and
venture lending is a tricky business. But we're coming to the close of our chat, and I want to make sure I get a sense of what you're up to with Chavanette Advisors. Maybe you've been great at setting the stage. I have a much better now appreciation for kind of why CBDCs have this systemic role. What do you see? You're obviously now working as an advisor, trying to get central banks to help, to get you to help them with this transition. Um, what have we learned so far? There's been a couple of CBDC efforts. My understanding is they haven't worked out very well, but what is the lesson, the takeaway you're getting from Sand Dollar, Naira, Cambodia? What do you see going on?
well, the most important is that you need a very clear blueprint. You need to know what you want to do with your CBDC and how far you want to stretch it. And what I mean, how far you want to stretch it, maybe that is a subject of another talk we can have, because you can really change the entire banking system and turn the fractional banking system around, right? And do, I call it reverse uh, deposits with the banks, right?
So walk me through that. So instead of a fractional reserve system where a bank only lends out a fraction of the reserves it takes because it has to risk manage the fact that some people might want their deposits back, but of course they don't make money unless they have as much of that deposit base out on loan or doing something else.
Yes,
So
but if you look
what
at
would that
Hong Kong,
what would that look like under CBDC?
no, if you look at Hong Kong, for example, you have banks which can issue currency like
Right.
HSBC and then China, but all that currency is 100% covered with US dollar, right? So you could have a similar system like that for the entire banking system in a country. But that would mean you are taking their ability away to create liquidity out of thin air. And then you need to have a mechanism in place to give them back that liquidity without losing control of the money supply and the allocations to the
Right.
individual bank.
But in Hong Kong,
Uh,
there's still a money multiplier effect. There's still credit creation by private commercial banks. I can go to
yes,
them and get a loan, and that works the same as it does elsewhere. So, what's the constraint
but,
of having them as the issuer of the notes?
but if you have an environment where everything is CBDC, then the
Mhm.
situation is totally different, right?
Okay.
And I'm working on a paper at the moment to explain that in more detail. But coming back to the question you had earlier on, what are the issues at the moment in the CBDC rollout we have at the moment in many countries? And I would call it a limited CBDC rollout. You need an overall blueprint and roadmap. Then you need a communication plan right from the beginning, right from day one. You start a CBDC implementation, and you have then to communicate with all the stakeholders and the public all the time and tell them what you are doing. And then you have to create the right incentives for merchants and the public to use this CBDC. But even there, the central bank and the regulator, they could just regulate that this is the new way of doing things, and you cannot use anything else but those type of new CBDC
Right.
related payment
Yeah.
rails.
It seems
And
that most of the conversations I hear are usually like, "Oh, should we do a wholesale or should we do a retail?" Is that the right kind of conversation to start off with?
that is the right uh, start of a conversation if you want to be conservative, because retail CBDC and wholesale CBDC are different,
Mhm.
right? The wholesale CBDC is mostly cross-border and large transaction, and it's between central banks. whereby the retail CBDC is much more complex because it affects everybody in a country. And that is why initially you have to do a pilot, not a sandbox. A sandbox is good for training and for playing around. That is what a sandbox is for. A POC is just trying to check from a technology point of view if the technology works, right? You can do a POC on a blockchain, it will work. Then you do a POC for a retail CBDC and it will not work and it will fall apart, right? So that is the difference between POC and the real pilot. Therefore, pilot gives you, you use real money, you do integration into the core systems of the participating bank, you do linkage to participating merchants, and you get a real life feedback, what works and what doesn't work.
Yeah.
So China and to an extent Thailand, they are the only countries I'm aware of which did it the right way. So China has a pilot now of 100 million people, which in any other country that would not be a pilot anymore.
Right. That'd be the whole thing. Yeah.
Pull out, right?
Yeah.
But that is the right way to do. I think they gained so much knowledge in how to work with such payment rails, how to get ready for the digital economy, that they are light years ahead of anybody else.
What is
So,
what is the implication for say e-wallet providers in that kind of environment? So, if they want to really be serious about making the e-renminbi the accepted form of digital cash, does that mean that the Allis and the WeChats and these sorts of or other fintechs will wherever you've got a wallet, basically could be a bank wallet, are those things going to have to carry the national version? Is there going to be choice, or will things have to at some point move into a single version of digital cash in a given country?
Well, I think in China, all the major players, including Alipay and all that, they have already the CBDC version, the yuan version on their app. So it would now just be a matter of switching off all the others. And that is ultimately what the central bank has to decide.
Yeah.
And yes, that is I think the future, because otherwise, why do you need CBDC? Right?
Okay.
A lot of the things can already be done with traditional technology.
And what is the confluence between CBDC and blockchain? Does it have to run on blockchain? Because I think in China it does not. But other examples, we're seeing a range of cross-border type of payment operations being done by private crypto businesses. Just how important is a blockchain base to this versus other types of systems or databases?
Well, it has shown now in all those successful deployments that blockchain and DLT doesn't work for retail CBDC. And the last example is Thailand. They just finished their pilot in December of last year. And again, they had to move from an approach of DLT to a more traditional technology approach, and it works very well, and it can handle the volume. For the wholesale side, you can use the DLT technology because the number of transactions are smaller.
Mm-hmm.
And the volume is lower, and the players are clearer. The nodes involved in that.
What's one or two developments that you're keeping an eye on that you hope to see, or things that would be necessary to kind of advance this whole project from your perspective?
Well, I have to quote the governor of the Central Bank of Indonesia. He said, you have to think big, you have to implement small, and you have to do it fast. And that is really, I think, a good explanation in a nutshell what needs to be done. Right? We need to think big. We need to have a very clear vision of where we want to be in the future. Then we have to implement it in stages, in small stages, but we have to do it fast.
And any markets in particular you think are likely to show that they're on that path?
At the moment, most of the central banks in the world are experimenting with CBDCs and are putting their toes in the water. But everybody, I think, is just looking at the neighbor. What is the neighbor doing? But I think at one stage, as soon as one central bank decides to do it, what I call the right way, then I think it will open a floodgate, and we will see hundreds of these projects happening around the globe. And that is where in Chavanette, we are working on creating a standard which we will make available to the public as a non-profit organization. This benchmarks, these standards, this baseline is then being used in our galactic grid, which assesses the different technologies and the different vendors for CBDC, because at the moment we have a lot of chaos. You know, there are many vendors, a lot of vaporware, many vendors are scared of the implementation. And then the last one is the implementation methodology, which we have also developed, which we call CBDC Now, which then is being adjusted for the needs of each country. What really amazed me during our research is that some of the vendors came back to us and said, please don't include us in your grid because we don't know how to do the deployment. We are concerned about that. So
still a long ways to go.
Yeah.
Okay. Well, look, Hubert has been very enlightening. I'm grateful for you making some time. Thank you so much for joining me on DigFin VOX.
Thank you very much, Jame. Thank you very much for having me.